So right before I went live, I asked Vitaly a question, but he said go live because I guess he wants to give you all the answer to that question live.
Sure.
My question was, do you do any drugs, Vitaly?
Jesus Christ.
Do you or no?
I'll just hold this right here. Is this better?
Yeah, that's fine. That's fine.
You know what? I'm not going to answer that question.
I just asked it randomly just for the hell of it. But okay, I guess.
Yeah.
I
would say no on the internet. I would say no.
Guys, our videos from Finance Junkies for the past 2 episodes got hacked by Univision. Do you have any thoughts, or got copyright claimed? Do you have any thoughts?
I was like, hacked.
Why is Univision claiming everyone's content that talks about the Tesla bot? Any theories you guys have?
They don't even own the video.
I don't get it. Tesla owns the video. Why is Univision taking, like, I don't get
it. This is the way my mother, this is when we talk on FaceTime. This is how I talk to my parents.
Yeah, me too, man. My mom, I still tell her, like, Mom, just take the camera. Just put it, like, right there.
I'm like, can you tilt? And they're like, okay.
That's hilarious. Thank you 120 people for being here in the past minute. Who do we got? We got Will. We got Myra Singh. Myra, you've been an OG. Thank you for being here. Justin Bryant, Dean Pierce, Imnop's an OG who's been here for a while. Luke Francis, Ray, Ahad. Today was a fun day in the markets. Today was a fun day.
Well, before we get to the markets, let's always start out with something more benign. So what did everybody do today?
I stared at my portfolio because today was a fun day in the markets.
All right. I barely looked, but people told me how well I was doing. So thank you all. KRIS, what did you do today besides look at your portfolio?
I called him in the morning, congratulated him on his TFC position. And then after that, it was overall his portfolio too. I mean, that, and I think I was a little bit impressed by his evolution as an investor now. He's getting
a lot of
understanding.
I gotta say, as human beings.
Huh?
I was trying to lead to other topics besides looking at your portfolio, but okay.
Oh,
we'll talk about our portfolio.
I don't really have too many other things, man. Other than that, I had some calls with some Patreon things. I wrote this really long post about solar, which was very interesting.
Oh yeah, God. We got it. Now you're not on his Patreon, right? He's bullish.
What am I going to subscribe to? That now he's bullish about solar? I'm going to subscribe to that.
Yeah, pretty much. I read that in the morning. I was like, wait a second, he's like, buy Enphase. I'm like, okay.
Oh my God. Okay.
I didn't just say Enphase. Okay, there's a few other companies that I mentioned on.
No, I love this because now when Enphase moons, Vitaly, you can't talk shit anymore because KRIS is bullish.
I don't need to talk shit. Listen, I want everybody to come on board the train. I have no problem with people making money. Everybody thinks it's a zero-sum game. It's not. I think we could all be, well off, but we don't have to believe in every story. So if KRIS doesn't like solar as a long-term story, I actually don't care about that. My only objection was like that he was shitting on Enphase when he wasn't interested in buying it. Right? Why?
That was more for fun. That was.
I was like, why are you even studying something you just don't care about? That was my whole thing. Like if you because I don't go out of my way to look at TFC, like what they're doing, what their business is, just because.
But you did. But you did because you posted it on Twitter about what their channel was going, like the channel that it was.
But that wasn't a TFC. Channel. That was the X.
That was TFC. No, that was TFC.
No. My chart was the X. What is it called? The XLI. What is the
XLF?
The financial channel. So if the financial channel, all the financials are moving up, obviously TFC is going to benefit. But obviously stocks like SoFi could benefit, which they are. So that was my point, that any bank stock that has been shit on, I bet you Citibank is doing well. If we're going to talk about that,
I have to double check.
But Citibank was down a lot too. Like there's certain stocks that were creamed. TFC is not the only one that was creamed in the banking sector. So I bet you all of them are moving in tandem because now that the economy is not going to be shit and people still have jobs and Powell somehow has a soft landing orchestrated. Who the fuck knew that would happen? But it seems like it's going in the right direction. So banks will do well. Yeah, I agree with you. But you switched it to banks again from solar, motherfucker. So there you go.
Well, I mean,
KRIS, here's the question. KRIS, would you buy Enphase now? Or would you actually?
Yeah, absolutely. I told you guys, remember when we were having the discussion about Enphase, we were like, what would your price target be, KRIS? Right? And I said at first, I was like, oh yeah, 150 would be a good price target. And then 100. right? And then went down to 70s and I still didn't buy. The macroeconomic conditions have to be right for me. At the same time, the company has to be, in terms of valuation, makes sense. You guys are a little bit more forward looking. I'm a little bit more shorter looking, but every industry has value. Let me take a step back. Not every single industry has value, but a lot of industries have value that if you get in at the right time can be an exceptional return. And if you get in at the wrong time can be a really big boondoggle for a really, for a long protracted period of time. Ask anyone who bought Oracle at the top of the market in 2000, the returns that they got for the next 10 years. They would have all said, bro, Oracle's the shittiest company I ever invested in. But now everything makes sense. So the question is,
hold on before you move on from that valuable point. You're right. The probably missing is it was valuable at 100, and 100 was not the all-time high. That was still like 70% off the all-time high. $73 was, I think, 85% off the all-time high.
I was like counter at 6, basically.
So basically, like, there was very little downside at that point. Like, even if it went to 50, the downside was extremely low for a sub $10 billion leader in the market. Like, it was just stupid at that point.
I would say that, number one, I'm just not talking about just Enphase, by the way. I'm looking at other companies in the sector as well. Like, there's 4 companies that I identified in my Patreon post, but the key that I wanted to just
would you mention them here? What are they?
Yeah, of course. One of them is Solar Edge. Here, I'll actually just.
No, I'll bring it up. I got it right.
Didn't I said basically Solar Edge is a great hedge, especially to Enphase at these prices.
Solar Edge. Enphase, First Solar, because First Solar has a unique value proposition that they actually build out the infrastructure. So they're more of a, hey, let's work with companies to decarbonize and do utility scale projects. And then of course you have Jinko Solar, which is one of the largest producers of panels themselves, but their unit economics are just out of this world. The key to my investing in solar now is actually, I mean, can you go all the way down to that chart?
No, are you saying you already bought in?
No. I'm saying I'm going to, but this is the key to remember. Keep going a little bit higher. No, higher. Right there. One more up. No, the first one. There you go. That one. The market curve. Whenever you look at a lot of opportunities when it comes to technology, right? You have these hype cycles where everyone just gets all hyped up about, oh my God, this is going to be the next biggest thing. People tend to get in and then they overpay. And then what happens is reality kind of sets in a little bit. And then it goes into, hey, this may not actually be the next biggest thing. And then things go back down again, right? And then you have the liftoff, and it just goes back into the area where you want it to go. And it happens to multiple technologies. So if you look at it, these are like the main things that I look for when it comes to investing in new technology. I think right now AI could possibly be in a hype cycle where a lot of people are hyping it up like it's the greatest thing on the planet. And ultimately it could be the greatest thing on the planet, but there could be a point where we do see a correction. And that's when you really want to, keep showing that. There's one other thing I want to show Amit real quick on that. Okay. So if you go a little bit further down, you can see that there's multiple market curves that are happening right now. So if you look at right now where SaaS is in cloud, there was a point where everyone said, oh my God, this is going to be the greatest thing on the planet. And then everyone sold off a lot of SaaS companies and a lot of cloud providers, and they're riding all the way higher. But then you can also see that there are value traps that come in also, like nanotechnology. Nanotechnology, after their precipitous fall, they never became big again, right? And you're also seeing at the end of the curve, if people don't have a sustainable market, they end up dying off. So you can see right there, replaced by new technology like radio and newspapers. They're going to be disrupted. They're not going to be sustainable forever, right? So if you look at right now, the internet, it went through the same exact type cycle. 1999 all the way up, everything was internet. Everyone bid shit up. Then internet collapsed, and then the next 20 years it just rode up, and now it's in a more sustainable.
So where is solar on this market curve?
Right at the bottom. Clean tech.
Oh, clean tech. Okay. I just want to say this real quick. I think this is actually a really good point, because I thought about it a lot today. None of us really saw how dovish Powell was going to be. Like, no, even Tom Lee didn't see that dovish. So I think Enphase would still be in a tough situation right now. SoFi would not have gone up to almost 20%. A lot of these stocks would not have had the past 2
Just
days.
FYI, and before Powell said anything, Enphase did reach around $109 or so.
Yeah, but then it went back to 97 is my point. If Powell, imagine
there
if Powell was
were
hawkish, it would go
sell-offs.
back-
Hold on, there were sell-offs on the market. We hit the bottom, and I said it even weeks ago. I said I think we saw the bottom at this.
I agree.
Because
you're right about that. I'm just saying the euphoria we got the past 2 days where shit really like Enphase hit 125 today. That doesn't happen unless Powell's dovish, and no one thought.
Well, because now people are front running. Obviously, what's going to happen? That's what's going on.
And
I'm not saying that. The thing is, I'm not saying it can't go back to $70. It could absolutely go, because if it hypes up too fast and it runs up to $200, what do you think those people are going to do? Even I'm selling. I bought a lot of shares down here. I'm going to take some fucking profits of $200. So if it runs up too fast, then a similar situation can happen again. Just a roller coaster ride with Enphase. Yeah. The point that I always made, that there's a trajectory here that, and I think KRIS is seeing it now, that we are going to be into the bull market of EVs and solar. That's going to come up 2025, 2026, which I've always been talking about, 2027.
So it's interesting because you guys both took different perspectives. KRIS took the bank perspective that was undervalued. You took solar that was undervalued, and you both are riding it up. Like KRIS is doing well in TFC, you're doing well in Enphase, but you both had totally different ways of looking at it. Like Vitaly, you were looking at it like a techno optimist. KRIS was looking at it as like a value investor almost.
Well, yeah, you don't need to make money in every stock. I agree with I agree with KRIS on that as well. If he makes money on Verizon and TFC, who cares? The dollar, a doubling of a dollar does not matter where it comes from.
Yeah,
nobody gives a shit, and it took a while to learn.
Even if
that
you have
lesson.
to get on your knees, I mean, things happen.
Yeah, exactly. This is actually an important lesson. I'm glad you're bringing it up. That I used to be like, oh, I need this to go up. I need this. I'm so invested in this company. Guys, I don't need Enphase to go up. I have 5 other major bets. As long as one of them goes up, that I think is going to be good for the future, I don't give a shit if Enphase fucking goes bankrupt. Do you understand? Because that is not my only.
I think you would be kind of sad if Enphase goes bankrupt.
Would I like it? No. But if Tesla went to if Tesla went to $5 trillion, you think I'd be sad about Enphase?
No, I agree. I mean, yeah, that's
no. If Bitcoin goes where it's supposed to go, you think I'd be sad about Enphase? No. This is what I'm saying. I don't have all my eggs in SoFi. Okay, I don't have one stock that I picked. So I think that's what's important too in all of these lessons, that pick a good handful of things you believe in. If one of those theses doesn't happen, or it doesn't happen in a reasonable time frame, even Palantir, maybe Palantir will 10x, but maybe you got to wait too long. A lot of people can't wait that, right? But if they had 5 bets and something else 10x's, would they care that Palantir did not 10x? I don't think so. And it took a long time to learn that lesson, by the way. That's not an easy thing I'm saying. I know people are going to be like, I believe 100%. Like one guy on the internet who posts on Twitter, he says, I have $2 million in SoFi. Like, congratulations, you made money. That is fucking dangerous, dude. Like, what diversification you have. You know what I mean?
No, that's fair. That is very fair. Well, we talked about Enphase. Let's do a quick couple minutes on this, KRIS, and then I want to move on to some other topics. TFC rallied like a motherfucker today. $37, up 6%. Can you explain to everyone who's in the regionals why this happened today?
So this was a pure valuation play. I mean, if you look at the regionals, why they were sold off in the first place, a lot of it was due to 2 things. Well, number one, exposure to commercial real estate, which some of them have, of course. And the other one is because they have a lot of AOCI losses. So a lot of the loans that they had issued were very low interest-bearing loans. So when you look at a comparison between the newer loan generation on the treasury side, which is risk-free, that you can get like 5.5%, all the loans on the balance sheet for companies like Truist that are issued at 3, 4, and 5, those are going to look like dog shit. So everyone's like, oh my God, this is not good. So if you scroll down a little bit, Amit, you can see the book value of Truist. Scroll down just a little bit, right? Well, I don't know if it shows you the book value here. Okay, but the book value of Truist was trading at 70 cents on the dollar for the assets that were on there. And the reason why is because a lot of those AOCI losses looked freaking steep as hell for most people. So a lot of people did not want to be in this sector for a long time. So now with the Fed pivoting away from saying, look, we actually can see cuts in the future, you've got 2 major catalysts for a lot of regional banks. Number one, the refinancing that needs to be done on the property sector is going to be much easier to do. So that's number one. And number two, all those AOCI losses are actually going to get moved down, because what happens is now the interest rates are being cut. So On top of that, AOCI losses naturally will dissipate over time because, you know, as you're paying your mortgage, you know, people are paying their loans. So all of those factors, when you combine them together, you just have a giant value play in companies like TFC, which are great dividend players. Their cash flows are still strong. You know, a lot of the losses that are on there are paper losses. And so a lot of times people, they look at the paper losses and think, oh my God, these are real losses, and they're not real losses. So, you know, that's what it was. And so there was a lot of bearishness in the sector that caused a lot of great banks to go down. And now a lot of them are recovering very nicely.
Yeah, I think 2023 has been really cool. Just getting to learn from both of you guys as a younger investor, like VITALY and just you're talking to these fucking installers. Like you are just, I remember at one point when it got to like 90, I remember you were calling these guys even more. You're trying to figure out, is the interest rates actually affecting them? And you found out you can get it for 4% versus 7%, right? Like you are really doing due diligence. And then KRIS just trying to find out how this sector is like fundamentally misunderstood. It's really cool because now you both are benefiting from the fruits of your labor, of intellectual labor, of buying the dip. And that's what investing is about, right? About finding the alpha in a place where it's hard to.
I just want to point, it's also about holding it for a very long time. So I didn't just buy Enphase when it crashed to 7. That wasn't my first buy.
Right.
You know what I mean? Right. I've been in it for like 5 years or now, whatever it is. Time passes. And if you're okay with waiting, I think that's when you do the best.
Great. Yeah. Let's get into this. I wanted to play this clip for everybody. People probably haven't seen it. Tom Lee, the guy who's predicted everything. I think this is a valuable 4 minutes on where he thinks 2024 is going. Obviously, he's been right this year, so I think his opinion matters here. And then we'll react to it and see what the comments say as well.
Of where we were, and I was guest anchoring Closing Bell overtime at the time. And now, here we are again. The S&P's at 4719, and your year-end target is what?
4750 to 4800.
That's crazy, Tom. That's crazy. How do we get there from here?
Yes, I know. Anything can happen the next 2 weeks, right? Yeah, I think it's been a year where markets have been surprised by not only the resilience of the stock market, but the fact that inflation fell really quickly, and the Fed, which had really held really strongly to a data-dependent view, an inflation war view, I think essentially gave that up yesterday. I mean, I think it's now proven the Fed is now focused more on managing the business cycle.
Okay, so what can you still put your money into from here that has upside? I mean, the commercial real estate arena perhaps is easing off with the long bonds not so problematic. So we saw the KRE, the regional banks, doing a bit better. What areas do you see that have potential?
Well, I think investors in the next 12 months are going to start to say, what things get fixed if the Fed just stops being so aggressive on rates, right? So if rates fall, and it makes a lot of sense that asset quality gets better if rates fall for the banks, commercial real estate comes back, small caps, which are highly levered or higher levered, really benefit. So to me, this, the next 12 months, it seems like small caps can be up 50%. The Russell 2000 just crossed 2000 today. So maybe
50%.
Yeah, so it could be Russell 2000 hitting 3000.
I mean,
damn.
Today, to your point, it's another 3%, almost 3% day for the Russell 2000. It's up 8% in a week. It's up 17.5% in a month. How much of this hinges, though, on yields continuing to move lower? And is there a point at which this steep fall in yields actually signals issues for stocks rather than positivities?
Yeah, I guess on that latter part, you're wondering if it turns into a growth scare.
Mm-hmm.
I think that people are trying to figure out what message is coming from lower rates. But remember, it was just in October where everyone said term premium is permanently higher. Future inflation expectations are higher. The Fed has to keep a higher neutral rate. I think on 3 of those things now, given how much inflation's fallen, I don't think there should be the term premium. It should return to normal. The neutral rate probably is staying lower. And then inflation expectations are coming down. That means the 10-year, could be below 4% for all of next year. And that would be really big for small caps because, on a price to book basis, they're trading at where they were in 99 relative to the S&P. And that was the start of a 12-year outperformance cycle.
So he goes on to just say that small caps are likely going to outperform, given a lot of big tech is going to rotate a little bit. People are just going to want exposure. And that's where he says they can go up 50% from here. That's where he ended the clip.
So I just want to bring you back. Tom, back in January, says we're going to hit 4,800 on the S&P, whatever he was saying, somewhere around there.
Yep.
Everybody said you're a fucking idiot.
Yep.
Right.
Yep.
And all year long, he was a moron. It went up. He was almost smart for a little bit, but then we crashed in October and everybody. And then he went away for a little bit because like CNBC didn't want to see his face. Okay. And now he's back because look, at the end of the day, and we've said it on Twitter. We say a billion times, bears sound smart and bulls make money. If you look at the history of the S&P and the Dow, all it does is go up and to the right. Sometimes it takes a year or two break, and then it goes up and to the right. And this has been the history. That's what I've learned over like 20 years of watching this. I've messed up so many times, missing that one thing, understanding how it all works, that America is the greatest country to invest in. I don't make that mistake anymore. The fear is the mind killer, basically, in all of this, you know?
Did you just quote Dune?
I just quoted Dune. That's right, baby.
That's crazy that you quoted Dune, bro. That's so crazy.
Do you know what Dune is?
He doesn't know what Dune is now.
Of course I do.
Go ahead. What is it?
It's a movie.
What is it about?
Yeah.
The fight between good and evil.
Okay.
Every movie is about the fight of good and evil.
There you go.
Fucking guy over here.
I've never heard of Dune, bro. I don't fucking know what
Yeah.
it is.
There you go. He's on YouTube all day. He doesn't have time to watch quality movies or read books.
It's true.
Chris, what do you think about small caps going up 50%? Is Tom
I-
Lee too bullish there, or
No. I think he's absolutely right, dude. There's a lot of great companies in the small cap space that have been oversold. I have a few that I've been buying into, and I made a switch today. I told you guys yesterday from the General SPY to the IWR because I think that there's a lot of great large caps in that space that could do exceptionally well. In the mid cap space that could do exceptionally well. So just keeping my eye out on some exceptional returners. Like there's one that I spoke about on the Patreon, Atcore. Atcore was up 9% today. And they are heavy into construction projects when it comes to like data centers and stuff like that. So companies like this, they often get overlooked because they're not our day-to-day like things that are in your face, but they're technically in your face, and it's just one of those things that you can't really find. Another one, of course, was SMCI. If you remember earlier in the year, no one really knows what Supermicro really was until NVIDIA comes out and the CEO of NVIDIA, Supermicro is right there with them saying, hey, listen, these guys help us make the AI shit work. So these are the kinds of opportunities where I think are sometimes a bit hidden in the small and mid cap space that are worth exploring and looking at. And I think we've got a nice year of bullishness coming our way. The other thing is a lot of mid caps are regional banks. So if you look at it, there's a lot of exposure.
What is a market cap that is like 40 billion? What is a mid cap market cap?
So mid cap is usually, I think, between 2 and 10 billion.
So small cap is below 2 billion.
Well, actually, let me double check. Hold on one second. Mid cap value. Hold on.
Wow, I thought like 50 billion was still kind of mid because large cap is like trillions, right?
So between 2 and 10 billion is a mid cap.
Okay.
Large cap is, sorry.
So no. So a large cap is, I actually did not know this. You're saying 10 to what? A trillion? what is
10 to no, anything above 10 billion is large cap. 2 to 10 billion.
It feels like that should change.
mid-cap.
It feels like that should like shift a little bit now. Yeah.
I would think so, but that's the definition right now. So here's the categories. And here's the thing, companies can jump from being mid caps to large caps very easily too, especially if they have like a hot product. That's the other thing that's always nice. Like you look at CrowdStrike killed it and now is in a much bigger place. So right here, micro caps are anything between 50 and 250 million. This is like usually the most speculative names that are out there. Small cap is 250 to 2 billion. This is a little bit less speculative than micro cap, but these are still like companies that are not 100% profitable yet. They haven't got to a point where they can show, cash flows for a significant period of time. And then you have the mid cap space. Mid cap is you usually have profitable companies that are generating cash flow, but could be on the cusp of greatness. they're not 100% great yet, but they could be on the cusp of greatness. And then of course you have large cap, which is the greatest companies in the market. And then you have mega caps, which are just like the godlike figures who generate so much money that no one ever doubts them. So
when you get above 10 billion, Enphase is basically a large cap by this definition, even though it's not interesting.
Yeah.
I mean, that is fair when you get to that valuation.
Like Solar Edge right now went from being a mid cap to a small cap, because Solar Edge right now is, I think, trading at under $1 billion right now.
Yeah, let me see what it
was
is.
it up today? So because it should be up with Enphase, right?
Yeah,
Solar
it
Edge,
is up.
It was
It
up
is
16%. It was
Holy
up 16%
shit!
today.
Who's in Solar Edge in the chat?
Me, motherfucker.
No, we're not talking about you. You don't get the credit for this. We're talking about the chat.
No, I don't get it.
You've been screaming about it forever. Who's in Solar?
So
Edge?
now it's at 5.4 billion in market cap.
Yeah.
So why didn't I buy this when it was?
Well, if you read the Patreon, you could have bought this morning, but
I wasn't gonna buy this. Yo, do you guys ever do you guys have the ability to buy after hours and before market and actually get executed on your trades?
Yeah.
Like, yes.
So that happens. That doesn't happen on Robinhood. That must only happen on the big boy broker.
It does for a select few companies.
That's the
that-
24 hour
you
trading.
could, yeah. That's what I'm saying. That for you, it could be just a select few.
But like
I don't know.
Fidelity allows you to literally buy a share in. Like I never done pre-market trading ever.
Yeah.
I've never done that.
Yeah,
Yes, of course.
you can.
So like it'll get executed as if you were in the regular markets. There's no like weird.
Yeah, I mean, there's very little volume, so your bid and ask prices are usually fucking just wide as hell. So you got to be very careful,
right.
But yeah, you could do that. You could buy in the pre. That's why you see stocks up in the pre-market or down in the pre-market, right?
Yeah.
So,
okay, let's talk about mortgage rates. Both of you guys understand insurance or not insurance, real estate. They've come down. Mortgage applications have gone up. Do you think we get a 3%, 4% mortgage rate anytime soon? Right now, they're still at 7%. What do you think is going on in the real estate sector? Vitaly, we'll start with you.
Well, no, I think Powell said we're at 4%, 4, 5, whatever he said next year. So that's impossible. What you're saying is impossible.
Okay.
So that's not going to happen. There is a way to actually pay down the mortgage. You pay a little premium to just get some points off. You pay a couple of points, your rate goes down a bit, but it depends. I would just wait. If you actually not wait to buy, if you're looking to buy a house, don't get me wrong, you should buy. But if you can actually get a mortgage in a year and a half or refinance, I would just wait the year and a half, 2 years, and then refinance. When it's going to be in the 3s.
Damn it, man. Where's my?
What are you looking for?
So I had a correlation between the 10-year treasury and the 30-year mortgage, because I think hold on one second, sorry, I got too many windows open. So basically, as one moves in a certain direction, usually the 30-year will follow that. So usually the 10-year treasury, if it moves down, then the 30-year mortgage typically falls in line with it, because it's not going to move based on short-term price movements up and down. So you're not going to see, if a 2-year jumps, you're going to see 30-year mortgages go up. But the 10-year is probably more correlated. So if you see 10 years going down, that means that mortgage rates will follow suit. Problem is, the 10-year is not exactly like super low either right now. And I think it's usually a spread of about 1 to 2 basis points. 100 to 200 basis points. So so imagine this right now. If the 10-year treasury is at 3%, mortgages will typically be at like 5, And so if you look at the Fed dot plot, let me just bring that up real quick.
But I have the dot plot too. I can probably.
Yeah. No, I have one that's like a little bit more color coded to reflect.
Better.
So,
Joe
sorry,
Juice says
guys.
I locked in under 7%, but I agree we'll be refinancing at first opportunity once it's sub 5%.
Yeah. The biggest challenge, hopefully, is you having a good amount of equity in the home when you do it. Because I think a lot of times, people ignore refinancing costs. Like, be careful with that, because it could be costly to refinance too. So sometimes it may not make sense unless the interest rate's super, super low. All right. So can you guys see my screen?
Yep.
Okay. So this is the Fed's dot plot that they published yesterday. You can see here, this is where we are right now. And what they're essentially saying by 2026 they're projecting out between 3 and 2.5. So like 3.7 is what they're probably targeting right now. So this right here at, let me just make this yellow. So if this is right here, then that usually means mortgages will settle about 200 basis points to maybe 150 basis points. So we could see, if it does go to this trajectory by 2026, mortgage rates being about 5.5 to 4.5, somewhere in that range, which, believe it or not, is not that bad. 4.5%, 5% mortgages, I could live with that.
Not only is it not that bad, by the way, it's pretty much low.
Yeah.
So, I even now, I know. I just want to preface what I said before. Like, yes, wait to refinance. That's fine. But if you need to have a house, you should not be waiting. Honestly, I don't think a major correction is coming. I think KRIS might still think a correction is coming, but I don't think that's happening. I think a lot of people are on the sidelines waiting for the rates to drop down a bit so they can buy a house, which I don't think a lot of people still want to move because they got crazy deals, 2.7%. That's still going to be the case. So for years and years, people have gotten amazing deals on these refinances, and that's still going to be hard to give up and go somewhere else and get 4% or 5%, because it'll be double what you, in terms of percentage wise. I'm not sure how much that is in dollars, but it's still not going to be beneficial to you to wait, in my opinion.
Agreed. KRIS, you're muted.
I'm of the mind that there could be two scenarios with regards to housing. Either we get some sort of black swan event and everything freaking crashes, because right now with the Fed lowering interest rates, I think at some point there's going to be a lot more people putting their homes on the market. There's a lot of multifamily homes coming on the market as well. So what we are likely to see is, and this is the scenario that I'm hoping for, which is a flatter growth trajectory for real estate, especially for shelter, for like people to buy homes. So no one, like right now, if you bought a $500,000 home, you're not going to lose $100,000 of equity. No, that's not what's going to happen. The best scenario would be that $500,000 home does not appreciate a lot over the next 10 years, in which case that will keep inflation really low. And so a lot of this is an inventory correction. So right now there's a lot of inventory that's sitting outside the market. I think over the next 1.5 to 2 years, as mortgage rates kind of come down, people will likely move. People will likely want to buy a new place. And that additional inventory coming to market will keep prices of real estate subdued. So we're not going to see the 20%, 30% jump that we saw in 2001 to 2002. That's scenario number one, where you just have a lot of flat real estate appreciation for the next 5 years, maybe 10. If
10. No. You are way too bearish on this. But I could see it being, like you said, first of all, 6 months ago, you were like, we're in a major crash. It's coming 20, 30, 40%. I don't know what you were thinking exactly, but I don't think that's happening. But I can see a situation where we remain flat for the most part, or grow very slow because we had such massive appreciation during COVID. So,
well, the other issue also is that, demographics are changing too. So there might be a lot of baby boomers looking to get out and, sell their home. Like I said, I can't say for certain that we're not going to have a housing crash, but that's the thing. This is what investing is. There's either one of two scenarios. Either we're going to get a 10 to 20% crash in housing because of all sorts of macroeconomic effects. I mean, look, no one's saying that a recession is completely off the table either. We could still get a recession, and recessions are a healthy part of the market cycle. So the question is, how will real estate perform during that recession? I don't know, but
KRIS, let me ask you this question to piggyback off that recession thing. There's this Goldilocks zone between the first indication of a cut and before the cut happens, and that's like usually 12 months. Are you of the opinion that we are in that Goldilocks zone right now, and then when the first cut happens, it actually is because something is bad? And that's when we should probably think of selling and taking profits?
No, I mean, I at this point, I can only go based on what Jerome Powell is saying. Jerome Powell is saying, look, our original thesis was it's transitory, and they're just going back to the transitory argument right now, right? Where inflation was transitory because of supply chain issues. The minute that the supply chain issues started to resolve themselves, yes, we had higher rates also at the same time, but those had a muted impact rather than a real giant impact. That's why the Fed didn't even have to go to like the Volcker mode in like the 1980s, because 80s was a different story. This time around, this was more supply chain driven. So I would say that now the supply chains are somewhat back to normal again, that we could go back into a mild inflation scenario for the next 5 years, you know, which is like a 2% scenario. So, yeah.
Right.
I thought you were talking about deflation, not inflation. Are you just talking about on housing?
Disinflation, right?
Right, but you said inflation.
Right. We went from inflation to disinflation.
Right.
And if we do get hit by a recession, we will go into deflation for a couple of quarters or two until the Fed starts to ease again, in which case then we'll ride back up into like normalcy again.
I think Garcia said it, and I was going to say the same thing, that we did have a recession. It was 2022. So
yeah.
Well, we already did have it. And the thing about recessions, which is weird also, I guess you learned this with time, is you don't know that you're in a recession until it's over. Right. Obviously, certain people know it. I'm not saying everybody doesn't know it, but the consensus of the world is once it's over and we look back, oh yeah, that was a recession.
Well, 2008 was the moment where the stock market and the average person, everybody felt it, right?
That was a special time. That was a special time. Yeah.
2022, it felt like the stock market because people still had their jobs.
Hey,
right?
That wasn't like a naturally occurring recession. That was like the banking industry almost collapsing. So I don't consider that a recession in the sense that we're talking about, you know, more jobs, more unemployment, that kind of thing, right? This was like we were on the teeter-tottering of actually our financial system possibly collapsing. Like I think it's a different thing that happened, and so everybody wants to relate us now to what happened in 2008. That's why I keep looking back. It's so different.
It's so different.
And so much not as bad, good. Well, so much better than it was in 2008.
Well, here's the thing. We could have had another 2008 after SVB and First Republic went down. The key, though, was that the Fed acted a lot more quickly this time. Like if you go back into 2008, they were really slow to act. You know, they were trying to do all sorts of crazy things, but they were very slow to act. This time, they just went straight, like with Powell and Yellen, and they just and the banking regulators, they just went in and said, you know what, fuck this. We are going to backstop everything. So right now, if you look at all the AOCI losses that the banks had, pretty much the Federal Reserve said, don't worry about it. We will be your lender of last resort if you get hit by a liquidity run, right? Do not worry about people making withdrawals on your balance sheet. Like so remember what happened with Silicon Valley Bank is that they had a lot of exposure to low interest rate yielding instruments, right? So these things were good. There was no credit issues with them, but there was an issue where these things were not as valuable. But remember, it's a paper loss. The Federal Reserve this time came in and said, listen, we're not going to play this game. We got your back. And they went.
Why didn't they do this in 2008? Why didn't they do that in 2008?
Because in 2000,
they thought it was more healthy to let like Lehman Brothers collapse, and then AIG was going.
Really?
Like, oh,
that's why they let them collapse?
They thought it was a lot more proper. And also, what is that? What is the saying when the Fed is interfering in all of economics? Like, what is that?
Bailing them out or something?
No, there's maybe Chris knows, but moral hazard. There you go.
Yeah, moral hazard.
That was discussed at length, and now we're like, fuck it. That's the difference.
In 2008, Obama put in a ton of money to save the auto workers. That was like the thing that helped us. Whereas this time, you're saying, Chris, the Fed backstopped the bank losses.
So they backstopped the banks. Forget about the auto workers.
This was the crux of the thing. It was called the BTFP program. If you guys remember, in when all of this stuff was happening. Do you guys remember me talking about it? Bank term funding program. So basically what the banks could do is take all of their shit loans, give them to the Federal Reserve, right? Get 100% face value cash onto their balance sheet right away. So if they were to get hit by a bank run, they could meet the withdrawals without any issue. And so what happened was that confidence alone gave people enough of a shot to say, hey, maybe I don't need to withdraw all my money from this bank, you know, because if you think your bank is about to collapse, you're going to pull your money out right away. So You just need people to be confident. And so a lot of banks like TFC, especially the regionals, everyone was scared about the regionals primarily because it's like, holy shit, these guys all have all this commercial real estate losses on top of it. Is my money safe? What am I going to do? And so a lot of people were just selling the stock off. And that's where I was like, listen, we need to get it ahead of this. Understand that the federal government has basically backstopped these guys, and we have nothing to worry about as long as
why don't you think the market understood that? Because those banks should have never fell to that level if they were backstopped. So did the market?
Because everyone was scared. It was fear, dude. Fear is one of those things. The fear is the mind killer.
There you go.
There you go.
Yeah, from Dune, that great movie I watched in 1994. I love it. Carlos, do you know about this movie Dune? Have you heard of this thing before?
No.
You know who Frank Herbert is?
Never saw it in my life. Of course.
So I'm not the only one who does. I'm
No,
gonna search this
no.
shit right
Watch
now.
all that stuff. Come on.
Dune
I'm a
movie.
film student.
So someone said Obama bailed out the banks. He had to bail out the banks. Look, I'm a Republican. Okay, I love all the principles of free
The
market.
truth comes out.
We figured it out.
No,
Trump, baby, we figured it out.
No, but you cannot have a system where everything fails and you're like, yeah, just because you don't want to go into moral hazard, you want to see everyone burn. Like, oh, everyone needs to learn their lesson. Like, you want to destroy the economy so people learn their lesson? No, that's not the way you run things. I will say this though,
But don't you also think that then a lot of people should go to jail? We're going to bail you out, but a lot of people should go to jail.
Oh yeah, I agree. That definitely should
remove the incentives to do it again. That's the real problem.
In 2008, one guy went to jail and had almost nothing to do.
He had like 2 years of probation after or something, right?
Yeah, it was funny.
Right. So if nobody goes to jail,
nobody goes to jail. White collar crime is not a crime in America.
Well, technically, none of what they were doing. Well, you know what? I take that back. 2008, there was a lot of crime. This time, there was no crime. There was just stupidity. You know, like, why the fuck would you be lending out a 30-year mortgage at 1% to some guy? And the reason why is because, oh yeah, you know what? Mortgage rates will always stay at 2% for the rest of our lives. Like, no, what kind of retard thought that? You know? I mean, I'll tell you, the Rocket Mortgage guy who I spoke to, he gave me a 2.75% quote. I was like, yeah, let's do it. Same guy called me fucking a year later. Hey, listen, we've got this great refinancing program. It's like, bro, why would I want to refinance into a higher rate? Please explain to me.
Yeah, wait, why? What's the logic? Why did he think you would
cash out? Right? They were trying to get
you need money.
Yeah,
you need money.
Cash out refinance.
Oh, okay.
Yeah. Okay. I'm like, bro, I'm not dumb. I'm not gonna do that. You know.
So you guys don't see, Carlos, let's ask you this question since you just came in. Is there a possibility for a 2008 level crash? And the reason I'm asking this is because it seems like guns a-blazing, but a lot of the bears still feel we haven't had the thing we were supposed to have. You don't get away with printing $7 trillion and have no consequences. Do you think there's anything that could happen? You know, we had a bank collapse, Silicon Valley. Do you think anything could happen in the next 2 years that could get us back to GFC?
I think the only thing that puts us at risk for that is another like massive macro event. I think at this point, I mean, they raised rates so much. They've tried to essentially break things, and the economy has done everything it can to adjust to the Fed, that I don't think that it's going to be something as simple as that. I don't think like one day we're going to wake up, oh, the jobs report was bad or unemployment this, and all of a sudden the economy tanks and we go into a recession. I don't see that happening.
I don't see that
So
either.
I know this is anecdotal evidence. I've been traveling all over the country, and every restaurant is packed. The streets right now outside are packed in Savannah, Georgia. Okay. Everyone's out. Everyone's eating. Everyone's having a good time. I don't see anyone suffering. Like, I'm sure once again, I know there's people suffering, but the places where the money centers are in all these states, even in the South that I'm at, besides New York, I'm not talking about that. They're just packed and they're busy. Walmarts are busy. Targets are busy.
I will say this.
People are shopping. People are eating. People are doing things that you didn't see maybe 2008, 2009 when it
Savannah and the state of Georgia are doing exceptionally well economically. Savannah has a ton of plants, like auto manufacturing plants that are being built around it. They are home to one of the largest ports on the East Coast, right? Savannah's a really beautiful city too. I mean, there are some really fucking dingy places outside, like close to the city as well. Don't get me wrong.
And we were there today. We were there today.
In the shittier parts or the nice part?
We went to the legitimate hood because we cover crimes. So we went.
Okay. Yeah. Yeah, if you make a wrong turn in Savannah, you will end up in not so nice place of town. But if you go to like the city center, they have like the architecture there is really nice. Like they have the trees, the live oak trees. Yeah, very picturesque. Yeah,
It's moss trees. I think they're called the moss trees, not
yeah.
the one where the
Well,
moss.
they're live oak trees, but they have moss growing from the thing.
It's amazing.
And it's illegal to cut down those trees, by the way. If you try to cut it down, they'll come after you.
I mean, it's so gorgeous. I totally
go
understand.
to there's this one ice cream place my wife knows. Me and her go there on date. We went there on a couple of date nights. Damn it. All right, I'll think about it.
Probably wasn't good ice cream.
No, it's really good ice cream. I just don't.
There's one across the street from me which we wanted to go. I think I know the one you're talking about. It's pretty popular.
It's always
where the SCAD students
go. Leopold.
Yeah, I think I know.
It's always packed. Yeah.
So your argument is because the restaurants are filled, you just don't think it looks
not
like
just restaurants, stores. I've been to malls, which I didn't think malls in 2020 would ever come back. That was my thesis. Like malls and movie theaters are dead. But I've been in both movie theaters and malls. Like, yes, the movie theaters are maybe suffering more, but malls are not. They're packed.
All right. Again, Freud in a slip, 645. We don't know if these people are just putting this shit on credit cards because that's a big deal.
Well, once again, Americans put things on credit cards.
This is a time of year where people will find the money for no matter what. They want to have a holiday. They need some time off. They want to do good for the kids. So, yeah, I mean, I'm seeing that there's people out and about. We just don't know if these people are putting it on a credit card. You know, at least in my industry, I feel like there's a reckoning coming January 1st. A lot of people that have been working are working, but January and February are typically the slowest months of the year. I know a lot of people that after the gig that we're on right now have nothing lined up. I have some leads for some projects, but I don't have anything lined up. And I know some people that work with me that need to literally work every week. They cannot take a week off because they've got
money management.
Their expenses are so high. And so just jokingly the other day talking to someone, I was like, well, what are you going to do? You know, you had a couple of weeks off. And he was like, I was joking with my wife about putting food, you know, putting the groceries on a credit card. And the way he said it, I was like, that's actually what they're going to do. So I think some of this could be funded with debt. I'm not sure.
I don't know. I don't see
some of it with debt.
America has always been funded with debt. So we've always had a credit card problem, at least for the last 20 years. So
but
I don't think this is
not
different.
making any money. It's
I don't think this is different.
It's different if you're literally not making any money and you're just sort of bankrolling yourself, not from savings, but going further and further into debt. So we'll see. We still need another month or two. And we need to see what the numbers were for the Christmas season, see what the retail numbers were and how much people spent, right?
I think we need another Junkies meetup. You know, someone's kid is on the way soon. So maybe we'll come by.
California.
That's happening probably in 2 weeks.
Dude,
but in January, but in all seriousness, it looks like in January I'll have either the whole month or a good bit of it off. So that would be
but she's gonna, the baby's coming like in a couple of weeks, right?
Yeah. If it goes the way that we plan it now, it'll be the 28th.
Are you freaked out? Are you excited or
no? I'm actually so prepared for it now. I'm actually so much more prepared for it than I was the first time around, that I'm actually excited for it, because I'm like, okay, we know there's going to be some differences between kid to kid, but I'm not going to get caught with doing some of the silly things that I did or spending money on things that I didn't think, or worrying about things that ultimately.
Does the little one know that they're getting a sibling? Does she like understand?
Okay. Yeah.
The second kid always gets screwed. Never gets all the good shit.
No,
we're talking about the baby gets everything, dude.
Yeah, and also it's a boy and a girl, so it's different. It's not like I can give him everything that she had. You kind of have to.
Wait, Vitaly, are you the older kid or the younger kid?
I'm the older one. I'm saying like the younger one is going to get all the hand-me-down clothes, the toys,
like I said, one's a girl.
Yeah, but they also don't get the beat down either. Like we got the fucking beat down. Like it was like, oh, you fuck up. With them, it's like,
hey, well, I don't know what you're talking. I'm the middle child, and I got the beat down because I was the boy. The girls they didn't touch.
Yeah, the middle.
I can't remember my parents hitting either one of my sisters, but I got it.
Yeah,
I
was probably a bad kid though, so you probably deserved it.
But I wasn't
knowing all the stories.
I got
knowing all these stories, Carlos. You probably fucking deserved it.
I did do some stupid shit, but I mean, I can't think of anything that I did where I really maybe like one or two, but I definitely didn't deserve some of the beat downs that I got. Let's be honest.
Carlos, you said you had a question for us that you were going to ask.
Oh well, it's too late. I do got to get to going to work.
Oh, you got to get to go. Okay.
Yeah.
Is a stock market question or?
No. It's just like a random fun little question.
What do you
but
want to
I would
learn
like
about the stock market? We'll help you, Carlos.
Yeah. Thanks, V. Buy monopolies, DCA into quality companies.
It seems to be working just fine.
Yeah. Okay. No, I think we should do that when we have a little more time, because I think the chat would have a good time answering this. It's kind of like our question about, president. If we were president, who would be one of those questions?
Wait, when do you have to leave? We have 8 minutes. We ended in 10
I know.
minutes.
We all have lines. When are we getting our
even.
t-shirts? When are we getting our t-shirts? We should all have a t-shirt line, like as part of the finance junkies.
We're gonna start merch eventually. It's 2024. We're definitely starting.
We
merch.
should. We should. Everyone needs their catchphrase. We need their catchphrase, like "Banks, baby" or something.
Yeah, we'll get a merch store set up. It's easy to set up, but we just
KRIS is what Beyonce showed up.
Yeah,
Beyonce in the front, Lizzo in the back, and it's a reversible shirt.
It's a reversible shirt. That's actually pretty good. That's smart. That's smart.
Yeah, that would work. Anyway,
okay. I guess we're done for today. That's it.
Are we?
We got 10 minutes left. What do you have? One more topic?
No. Let's finish early. What's wrong with that? Jesus. Leave them
I don't
more.
even give a fuck about this pod anyway, so I'll get out.
My God.
Or let's do this, Carlos. If you have to go, we'll do questions in the chat because I saw some questions for the last 10 minutes. REITs, KRIS and VITALY. Are you still buying REITs?
Yes,
Why?
absolutely. Right now, you should be buying REITs. 2 reasons. Number one, REITs, they benefit significantly from lower interest rates, because now that the capital costs for them to finance the projects that they have go down, right? And at the same time, the dividends are really high, which means their free cash flow can support that. So there's going to be a lot of yield chasing. So you have like a knock-on effect with 2 different things boosting things up. So now you've literally, REITs are one of the biggest beneficiaries of lower interest rates. So,
I've just been buying. That's like my favorite REIT. Once again, it might be boring, but I don't think that company's going out of business anytime soon. And they keep raising their dividend by some minuscule amount, but they keep paying it. It's a monthly REIT. And the other thing, it's also sort of down for the year. So I've done that. I've also bought Dollar General. It's not a REIT. I bought some more today. And I've also picked up Pfizer today. And I did have a Pfizer before, and it totally crashed.
We're going to talk about Pfizer later. Another
so
episode.
I did pick up more because, once again, yes, I get Pfizer's not doing well. Maybe their pipeline is not great, but it's another company that's just not going anywhere. And now the dividend is almost 6% for Pfizer.
Yeah. So there's 2 things that I'm buying. I'm buying preferred shares in one REIT that's no longer publicly listed, but the sponsor is really good, so I'm not worried about that one. So that's one that I'm buying. SL Green, I sold my position right at the top today, but then I got a call from Steven. And Steven reminded me of the goddamn short interest in SLG. And right now, the short interest is still fucking really.
So you're buying back in?
This is one of those times where I'm like, shit, what should I do? And I'm just like, bro, I don't want to be in a position where I miss out on a healthy gain either. I may have to wait until the 30-day wash rule because I really don't want to pay taxes on the damn thing. But because it's in my regular portfolio account, some of it, I still have some of it in my IRA, which is good. That one, I will definitely buy back because I don't have to worry about the wash sale rules in my IRA. So those shares that I sold in my regular portfolio, I'll probably not buy those back for the next 30 days. But the other ones, I may end up buying back in my IRA. And the one that I have in my regular, I may just shift that over to some other stuff. So that's, yeah.
Hey,
but Steven called me up and he was telling me about it, and I had like, okay, yeah, whatever, I'll take a look. Because I looked at it and I was like, holy shit, I thought the short interest would be fucking dying right now. Because, dude, how do you any shorts that were in SL Green, they got blown the fuck up. Like, badly, and still people are holding this. So,
what's the short interest? What's the amount?
36%.
Jesus, why is it so high?
I don't know, but they're stupid.
Carlos, what were you saying?
Put the link in the chat.
No. We got 5 minutes left. I can put the link in the chat.
No. TJ just wants to come on. He said he's planning a pool party, a yacht party in either Miami or California, and he wants to vote on it. So he was texting me to just come on for a quick.
He can come on tomorrow.
Yeah, he can go on tomorrow. Guys, when I put the link at 9:45, you got to join then because at 5 minutes left, we can't do it.
Yeah, tomorrow, TJ.
And tomorrow's what, Friday? So Sunday.
Tomorrow's Friday, so we'll do it Sunday.
Sunday night.
So is this a yacht party? TJ text me.
Yeah, he said he's watching. You look at the chat. He said he's
TJ looked at his end face today. He was like, "We're going back to the yacht.
Going
We're
back to the yacht."
yacht."
Actually, we should have TJ on tomorrow. He might have lost a lot of end face. He did covered calls, and this is what
Oh,
happens when you do covered
shit.
calls.
Did you
You
guys
lose your fucking shares. That's what happens.
No. If you know TJ will just
He
roll the
rolled it.
fucking shit
Yeah, he
out,
just rolled it.
right?
We'll see what
We
happens.
manufacture the win, right?
Of course.
What's TJ say?
See,
Did you
well,
talk
yo,
about,
well-
did you talk about Enphase getting taken off the NASDAQ yet? Did you talk about that today?
we can talk about that tomorrow.
Well, it's happening tomorrow.
TJ's
All right, we'll
catchphrase: sell calls, sell puts,
Manufacture the win.
win.
Actually, we're stealing that for our shirt. All right, manufacture the win is our
Yeah,
shirt.
we got to license it from you.
Licensing deals.
All right,
All right.
guys.
All right, I'll
That's
see
it.
you.
We'll see you guys Sunday night. Thank you everybody for being here. We had about 490 people here today. Awesome stuff. Yeah, we'll see how.
Oh yeah, hit
market
the like
changes.
because I think I only saw like 80 likes. So if you
Yeah,
guys
there's
can
only
do
about
that,
80.
that'll help us. Hit the subscribe.
Please like, and we'll
Yep.
see you
Thank
guys
you.
Sunday. We missed last Sunday, but we won't miss this Sunday. We'll be here this Sunday. So,
Bye.
all right, everybody, have a great weekend. Good night. Bye, everybody.
Later.